Hi everyone. Today we're going to walk through a completed 1040 form, which means that we're going to have all the additional forms, Schedule 1, A, B, C, and D and E, all of them in one problem. So let's take a look at what we have, and then we'll kind of get started here. So Ben and Akira Pasquale married. They have 3 children, Ashante, Raman, and Samantha. Ben's a history teacher. Akira's a carpenter. They're filing jointly. He also has a tutoring business, so he already filled out the Schedule C, so we're not worrying about that. And he's paying off his student loans. We'll deduct the interest. Akira also has a cartoon for a local newspaper, so she has already filed the Schedule C for her business. And she was unemployed for several weeks during the year. And here are their W-2s. So I already did some preliminary work here and found their total income off of their W-2s. So that's listed here and here, and I just added those two together. And to save some time, I also added their federal tax together, just so I know how much they're going to be owed in federal tax. And notice I rounded that to the nearest dollar in their federal tax. All right, and here is a list of everything else that they have as far as expenses and additional income and so on and so forth. So we should be able to do the taxable interest and ordinary dividends already. Okay, so that's here we all put in their W-2, taxable interest and ordinary dividends. So please pause the video and fill out the form up to 3B. Okay, so now we're going to be adding in several other things to their form. Okay, so we're going to need to go and look at their Schedule 1. Now, we've been at Schedule 1 before, like the state lottery and so on and so forth, but they have additional stuff. So in the Schedule 1, we also have state income tax, taxable income from their schedules, unemployment, and a prize from their from the state lottery. Okay, so let's just write all that here. Okay, so they have their refund. Okay, so their, oops, I just highlighted it. Tax income of 907. So there's your tax refund. Of 907. Okay. And then okay. All right, so they also have their business. So we need to add those together. Okay. Then they have unemployment. Now I'm just writing all this down. And that was 2,400. And then they also had prize from the state lottery, which was 2,700. Okay, so we're going to come over here, all right, and I'm going to go all the way down to Schedule 1. Okay, so we're going to add this into the Schedule 1. We're going to need to check off no all the way at the top, saying they did not acquire any federal interest on any virtual currency like Bitcoin. All right, so they had their taxable income credits offset by state and local taxes, so that's 907. Okay, and if we take a look, we didn't have any alimony, they didn't have any divorce or settlement agreement, but they did have business income, and they already filled out their Schedule C, so 2970 would go in line 3. Okay. All right. Gains and losses, nope. Real rental estate, nope. Farm income, nope. Unemployment, 2,400. Okay, and other income, they won the state lottery. So we'll just put state lottery. Of 2,700. Okay. Now, if you notice state line 9 means we have to add all those up. Okay, so take a minute and add those up. I got 8,977 when I did that. Okay, so now it does tell us to put this on line 7A of the original form. So we're going to go back up here, go to 7A. Okay, and if you look, it says things from Schedule 9, line A. So 7A, we're going to put 8,977. Okay, so that is, and again, we did a little bit of that before. Okay. All right, so now, if we take a look, it says adjustment to income, Schedule 1, add all of your lines for your total income. So we're going to need to add the 111,316, 1,683, 2,127, 8,800 or 977, and that's going to go on line B. So that's 124,000 and 99. Okay, so that is their total income. Okay, now, all right, and subtract. Okay, so I think we're okay there. All right, so now we need to make any adjustments to their income. All right, so if we look, our next part says that he also teaches a night course, which brought him $133 worth of materials. This is called education expenses. So let's write that down. So that was $133. And he also had to withdraw money from his CD account. So he had to pay a penalty of $57. All right, these are deductions that we can take, again, from our Schedule 1. So I'm going to come over here, go down to our Schedule 1. Notice that we have the second part there that says adjustments to income. Okay, so if we look, line 10 says education expenses. So that was $133. Okay, and there's a bunch of other things here. Business, health, savings account. Well, we don't have any of that. Self-employment, anything along that line. So as we go down, student loan interest deduction, that will be coming up. But let's add in our CD account. Let's see, where is that? Penalty for early withdrawal from savings, line 17. Okay, so that's where we're going to put the $57. Okay, now, as we said, he's going to be paying off her student loan and paid $2,000. So student loan paid $2,670 in interest. So his deduction, where is it going? So let's see, it is on, there we go, student loan and deduction, that's line 20. So that's going to be $2,000. Okay, but the problem is that you can only do maximum of $2,500. So we have a max here of $2,500. Okay, so we can only take $2,500 as a deduction. Okay. So if your student loan interest is more than that, you're only going to get $2,500. All right. Now, we're going to add all these up, okay? And enter this. Okay, so we're going to add a 10 through 21. So that's 0, 9, 2690, I believe. And that I can't add today. So that's going to go on line 8A. So let's go back up here. 8A, $2,690. Okay. All right. So subtract line 8A from 7B. So this is a deduction. All right. And when we do that, we're going to get 121. 409. Okay, so that's not too bad. Now, normally at this point we do our standardized deduction. The problem is that because they have so much information, penalty for where we withdraw for interest. Okay, we did all that. That's done. Okay, so that's done. That's done. So we have all of this information that, oh, wait, not all of it. Okay, we can't, child credit is after we look. Okay, so we have all this information which we can itemize, which means that we're going to take a look and see if I itemize all their deductions, is that more than the standardized deduction? If it is, that's what we're going to want to take. If it's not, then we're going to take the 24,400. So we're going to want to use a different form to determine if we add up all our individual deductions to see if we get a better tax break. All right, if we reduce our tax liability. Now, to do that, we're going to add in what is called the Schedule A. So this is brand new. All right, so how about if we take a break? Let's stop our video, and I'll make an additional video to give us some more time. So hang on, let's do a part 2 here. Be right back.